Happy Thursday. It is a 10 show with a side of whiskey. What was it?
You're getting it too hard right now, bro.
I'm excited, bro.
Shoot,
I'm excited because I got this right here. It's a side of whiskey. It's a 10 show with a side of whiskey. Salud.
Cheers.
Salud.
All right, yeah, cool. Guys, today I'm going to say
very special guest.
The special guest that we have, and the reason I say this is because I preach a lot to every veteran that I meet, and I say, hey, you know what? You got to figure out ways how to use your benefits, right? You got to talk to someone, be creative with it. And, and today we have an awesome guest. His name is Kenneth Castro, and, he's been in the mortgage business for a very, very long time. So he knows the ins and outs, and, located in Orange County.
Marine.
Oh, yeah. Marine. Wait, hold on. What is your favorite crayon or color, whatever?
Yellow.
Yeah,
as you can see, look at the surfboard behind you. Yeah. That's right.
Awesome.
I should have brought crayons today, bro.
I mean, there's a Marine. There's a Marine that actually, made some edible crayons. So,
oh wow,
we should. I want to try them. So anyway, I don't want to take much of your thunder, bro. It's all yours. You know how
Please
it is.
Introduce yourself.
Well, hey, I wanted to say hello to the Tent Hut community and to all those veterans that are patching in tonight. I'm glad you're here, and I'll give you a situational report on what's happening in the mortgage business, and how you could take advantage of some products out there that may be getting you into a house, or if you currently own a house, it puts you in a better financial position in the long term.
Mm-hmm.
So I've been trying to get Ken on the show for a long time. And, the crazy thing is that he, in 2018, he helped me out here in California to buy my first house in California. Property everywhere else, but here in California is different. Oh. And just recently, I reached out to him and I said, these interest rates are a lot lower. And I had a pretty good interest rate. It wasn't bad. But they're a lot lower right now. And I was like, I don't want to go through the whole hassle and all that stuff. He made it super simple. I think everybody that I've sent to Ken has gone with you, right?
Yep.
I don't think I've had one person say, no, I didn't use them. And the big distinction, I think, and when talking about mortgages is that, a lot of the times we as veterans, we just go to the bank or a bank, right? And we just say, hey, I need a loan or I need a mortgage. And the bank is going to give you the best that they have for your situation. But the difference that I want Ken to explain to veterans is the difference in the type of brokers. And what is a broker? Let's start with that.
What is a broke person?
That too.
Broker.
That too.
Yeah. Like what is a broker? What is the bank? What is the bank's role in it? How does the funding happen? And especially for veterans, how does that work?
Yeah, I mean, so for the VA, I mean, for what we're discussing as far as government loans, right? The VA loan, and you can go to 3 different places. You can go into the bank, like you said, and Wells Fargo, Chase, whatever. And go and apply for a VA loan there, and they do veteran loans, but they're a depositor. So basically, they're looked at by the regulators a little different than a mortgage banker or a broker is. And the difference when you walk into the bank, I just tell you, and I tell this to everybody, the bank doesn't have to really work for the veterans business, right? Because you're banking there anyway, so you go in there to go deposit money, extract money, whatever it is. And so, they already know that there's a percentage of foot traffic that they're going to get. They already know. So they don't have to really bow down to you. They don't really have to work hard. And the reality is a lot of the loan officers that are working for the banks, now this isn't always the case, but a majority of the cases that you're looking at somebody coming out of college or high school that got into the finance business and somehow landed that loan officer job, and now they're going through that process of learning. So you're getting somebody that may not be that seasoned, right? And they're really relying on the background of the bank. So if you're with Wells Fargo, hey, we represent Wells Fargo, and everybody knows who Wells Fargo is, right? So they're really not they don't really have to bend over backwards for the veterans business. And a mortgage banker is something like what you see at Loan Depot or Quicken. These are big mortgage banking shops, and there's smaller ones as well that you probably have heard of. And these are lenders that either retain a portfolio of loans and they're already currently serving it, and they're going to try to rewrite that business, not lose that business. So they want to continue servicing that business, and so they'll come to you. But again, a lot of them already have some type of presence, some type of market presence, right? Street presence, right? And then you have the small mom and pop broker shops or a large broker shop. In the case with me, it's C2 Financial is the largest brokerage in the United States. So what that means to the consumer is that it gives us the ability to get you the best pricing out in the marketplace, and we shop everybody. And so the difference between a broker such as myself is that I have over 100 lenders that I shop for my consumers. So if a veteran calls me up, I'm not just looking at Bank of America. And what Bank of America and Wells Fargo don't tell you, it's these larger banks and these mortgage bankers, the larger mortgage bankers, is they have what is called the TPO, right? A TPO is a third party originator program. In other words, they come to guys like me and they're like, hey, we want to do business with you. We want to capture as much business as possible. So we're going to give you our programs and we're going to give you our great pricing. And so when you go to like a Loan Depot or a Wells Fargo, I sell that same money at excellent price, at the same price or better than their own loan officers can get them. Yeah. So and so a lot of people don't realize that a broker really has access to that money, and in the case of C2 Financial, we have that money because we're the largest brokerage in the United States. And so that's really the difference. The difference is that the other difference is that, as a broker, I rely on my referral, my strategic partners, like attorneys, realtors, financial planners. It goes on, right? And also those customers that, like you, Will, that, came to me and we worked together and you were happy with the business. And you referred me to other people, and you came back again. And really, it's because I really have to cater to what your needs are and deliver, right? And so, that's how that's the difference.
Yeah, just real quick, I just did the refi about 2 months ago, and before that in 2018. In 2018, I came in and I remember I told Ken, like, for 2 years, because we met like 2-3 years before, and for 2 years, hey man, I'm gonna buy a house, just give me some time, I gotta get some stuff squared away and I'll come back. And in 2 years, and he's probably like, oh man, this guy's over here just BSing me. But you paid me attention because you were still trying to work with me. Yeah. And this time that I wanted to refi, now it's okay. I'm looking at the interest rate that is the lowest, right? But which one's going to be the best bang for my buck, right? Yep. And you presented 3 different options, you know, and you clearly explained it to me, and you went over the stuff. Hey, look, you go with this one, you're going to get this much from that side, and this, moving the money around in different categories. And that's the big difference that you will not get at USA Bank or Wells Fargo or Chase. You're going to get a broker that has options versus just one bank, Yeah. So, and I love that, and I think everybody that I've sent you has said the exact same thing, like, hey, he got me the best thing. He showed me different options, was able to, give me options. But I want you to talk about a little bit about, so here in the state of California Veterans or Department of Veteran Affairs. So it's by the state, not federal. Yep. The state will actually provide you a loan. Can you talk about a little bit about that? How does that work? How does Calvet provide a loan? Yeah. So,
Calvet is separate from the federal VA, but in essence, it's still a VA loan, a federal VA loan that they offer. They also have their own bond programs that are not as robust as the VA federal loan that they offer. But where the Calvet really comes into play is that they offer down payment assistance as well. And so you have to qualify for the down payment assistance, but it's really helpful for an individual that may not have a lot of money to put in There are some drawbacks to the program, but it's like I tell people, we have to look at everything on a case by case basis. One size doesn't fit all, right? And the Calvet may be a good option. Where the Calvet really, where I found the Calvet has been extremely helpful, is like if you have a veteran, if there's a veteran out there today that says, hey, you know what, I already took out a VA loan on the home that I'm living in. I want to buy another home. I want to go into, I'm either upsizing or downsizing, and I want to keep the home that I have now that's under VA. It has a great rate, and I don't want to get rid of that rate, but I'm going to rent it. Well, you know what? You can reuse the VA loan, and Calvet. Some of the magic that Calvet does is that they'll look at a limited guarantee, and they'll actually even work with these limited guarantees because the VA, the veterans already used the VA, and they'll maximize that to try to get them into the house. And so there's a lot of other bells and whistles like manual underwriting, which hey, maybe your income versus your debts is really high, and it just doesn't fit in the box with the traditional VA. Calvet's a really good program for that as well. So there's a lot of reasons to go to Calvet and a lot of reasons not to go to Calvet. I always tell people the whole point is consultation. Let's walk through the process and let's determine what the best option or solution is. And don't get caught in rate. Get like what you said earlier, Will. Get caught in the best, not rate, but the best deal for you and your particular transaction. Yeah.
So you know what I tell a lot of veterans is you have to look at the forecast of 30 years, right? You're going to be paying interest based on 30 years of a mortgage, right? So can you explain that a little bit as far as the percentage? How does that work? Sometimes people say, well, the first year is a waste of money. You're just throwing it. Explain that.
Well, I just tell you, I mean, after doing thousands of loans, I could just tell you that statistical averages count. So most people, they refinance or sell their home between 3 to 7 years. I mean, the majority of people do that. They'll rewrite the business. They'll just do it, and that's why, like we were talking about, the differences between a bank, a mortgage banker, and a broker. That's why it's really important for bankers to really touch base with their pool of loans, because they already know predictably that every 3 to 7 years, something's going to happen that's going to trigger a life event that's going to change. So what I tell, and I hear it all the time, I've been told that if I don't save a point on my interest rate, I shouldn't do it, right? But the reality is that people refinance or they buy a new home for personal life changes in their life, right? And so it just happens all the time. I'll have somebody that, I had a call today. I had an individual that called, refinanced and got a smoking rate last year. He called me today. He goes, Ken, I'm starting to invest in real estate and I got to pull out $200,000 from my house. So I want to trade in that nice rate that you got me, right? And because I want the money. My house has increased in value over 50%, and I want to cash in on that so I can reinvest it in hard assets, right? And a hard asset is, gold, silver, numismatics, and real estate, right? That's some of the assets that will make you money over the long term, right? And so I always tell people, look, when you go into this for a refinance or a purchase, you need somebody to consult you that has been around long enough to see the cycles of the financial marketplace and really have that experience to say, you know what, I know what you're saying, but look at the big picture. Let me give you a macro view, because right now you're looking at it in a micro view. And then that way we can really look at the picture and really see what's best at this moment of time and for your foreseeable future, because it could change again. And it does change. I can just tell you, I'm a witness to it. It happens all the time, every day. That's just the way it is.
Yeah. So you do work with veterans that are trying to pull out money to invest. And that's something that you do work with?
I do. I get veterans that, like, hey, Ken, I bought this. I have a veteran that called me last week. He was referred by one of your referrals. Will. And he's like, Ken, I heard you, I heard about you. I wanted you to I'm kind of thinking about this process right now. And I bought this house and it's literally increased, 40% over the last year. And it's just been, it was an incredible buy. And you know what, I want to take some of that money and I want to reinvest it into another property because I see the value of owning a hard asset. He's like, I'm already in the equities market and, but I want hard assets now. Right. And right now, the outlook for housing looks fantastic still. It looks, I just sat through a meeting this morning, a 2-hour meeting with these economists that they think 2022 is going to be another stellar year for real estate, even if rates tick up a little bit, and so at the end of the day, I'd love to talk to those veterans that are like really considering, hey, you know what? I have some money in my house. I've been sitting here for 5 years or a year or two, and it's increased, $200,000-300,000 in value. And I want to cash in on some of that and reinvest it in something that may be a hard asset or whatever you want to do with,
I have a question. So I've gotten a lot of these.
You got a lot of echo.
A lot of echo.
Sorry, a lot.
How about now? Is that better? All right. So I get a lot of this question all the time. A lot of veterans looking to, get into the real estate business, right, using their VA. And the question I get a lot is like, can I buy a duplex or triplex, first-time home buyer, a duplex or a triplex? And if it's so, what is the process? What do they need to have to make this happen?
Well, yeah, the VA allows you to go up to four units.
Okay.
So as long as you live in one of the units, so you have to. It has to be owner. Remember, VA doesn't do investment properties. So but if you are generally going to live in that home, in that triplex or duplex or whatever it is, right? The program is there, and the loan amounts, depending on the amount of units, is substantially higher than a single family residence.
Really?
So yeah. So I just tell you, it's if somebody's considering that, which the tough part about units is that you're competing against professional investors, and so you have to, if you're going to present an offer, using VA, you have to have the right team to do that. And that comes to the point that I always tell veterans that you have to have the right team and the right person behind that to get you into that house, because it's so competitive right now. Mm-hmm. Right. The housing inventory, it doesn't matter if it's California, Washington, or Texas, or it doesn't matter. It's super competitive. And now you have hedge funds coming into buying blocks of property, and they're all coming in, right? And they can pay cash for the house. So now you're competing at let's say that you want to go in 100% of the value of the house or the sales price. You have somebody coming in saying, hey, well, I'm going to pay cash. You're going to have somebody selling you, the veteran, somebody selling you to that seller, And so that's why it's really important to have that. And I can just tell you, and I don't want to belittle the banks or the mortgage bankers or anything like that, because that's really not my purpose here tonight. But I can tell you that a lot of those agents that are on the other side of the phone, they don't have the experience to help you navigate, negotiate that on your behalf, or they don't have really the time. And honestly, if your phone is ringing off the hook because you're Wells Fargo or Bank of America or, whatever it is, USAA, it's ringing off the hook, right? You don't really have to really invest the time to learn negotiation skills and to learn what the marketplace is doing, because you're already too busy to be dealing with that. Majority. So a broker is going to sit there and go, you know what? I got to get this guy into this house. I got to get this veteran, this guy, this woman. I got to get them into this house. This is their objective. This is the hill that we have to conquer. And so, you find your stuff and then you make it happen. And that's kind of the ethos that comes behind, at least with my business. That's how I go through it.
Right. Yeah.
So just to be clear with some of the veterans, they might have the question of what's the difference between a broker and a real estate agent. That always comes up. Like, well, doesn't the real estate agent do that? And it's like, no, that's totally different. Explain that?
Yeah. So a real estate agent is somebody that actually shows you your home, right? They're also called brokers. Because the way that in California, the way that they license you is under the Department of Real Estate, the California Department of Real Estate, and there isn't really a subset that says you're a real estate broker and you're a mortgage broker. It's you're a broker, and if you're a broker, I could sell real estate. In fact, for many years, I used to pre-approve the individual. I'd put them in my car, and then I'd drive them and do all the things. I'd act as a sales agent, and I was also a listing agent. I'd have clients call me, "Hey Ken, I'm moving to Texas. I'm moving to Phoenix or whatever. I'm going to sell my house. You have a good realtor?" And I'd be like, "You know what? I'll write the business for you." And they liked that because they knew me, right? And so I would, but it just got to be too much, And I decided, I really like the financing end better than the real estate end. So to answer your question, Will, basically a realtor or a real estate broker, what they do, their primary function, their primary job is to find, the home for the veteran and then start the negotiation process to get that person into the home. And the mortgage broker is there on the back and behind the curtain, doing the math and getting them the program to get into that house.
Gotcha.
Yeah.
Explains a lot. I want to throw up the link up here. So if anybody wants to reach out to Ken, reach out to him on LinkedIn. I'm telling you, we won't be disappointed. Even if you just have a couple questions for him, he definitely will give you an answer and, give you the best answer that suits your needs based on whatever you bring to him. I've sent you some tricky ones. I know I have.
Yeah.
And somehow you pulled some stuff off. So, I of course, because of privacy, you can't discuss that stuff, but I've seen the end result, when somebody comes like, I don't know what to do. I'm stuck in this mortgage or I can't afford it anymore and all this stuff. And you pull something off to make it happen for them. It works.
So I have a question as far as case scenarios. So, this is another question is like, hey, I make this much money. What can I afford? Yeah. So let's say an individual is making, I don't know, $60,000 a year. I'm sure I remember I was told there was a formula to actually, what's it called? It gives you an answer how much of a loan you can take out. Is there something like around that? Because it's been a long time for me. So.
So the VA and the lenders. So remember, the VA is not the one that lends you the money. They guarantee the money to the banks and to the ones that are issuing the money. So basically, what the VA says is like, hey, look, we want to write the business for our vets, and we're willing to guarantee the money. And then the lender comes back and says, okay, look, we're looking at your guidelines. And we like what we see, but we don't like this one part. And so what they'll do is they'll put their own guideline there. And so most of the lenders out there, what they like to do is they like to post and say, hey, you know what? We'd love to see the veteran. We'd love to have the veteran's gross income be at like 45% of its total debt load or 50% of its total debt load, right? So in other words, on that scenario, on a $60,000 income, let's just say they're saying, hey, look, we're cool with them having 30,000 of it going to a house, going to a car, credit cards, or whatever, right?
Right. Yeah.
Right. So that's ideal. For them, risk management wise, they like that. However, the VA doesn't put that restriction on to the banks. They just say, hey, look, write something that it's going to be good for our veterans. And so I've written loans that have gone 60, 65% of that, or even higher than that at times.
Wow.
Depending on the scenario. So, like I said earlier, it's not one size fits all. As a rule of thumb, 50% is what lenders look at, and in general time you'll get that. Now, if it goes into like a manual underwriting, in other words, it's not going through an automated process of underwriting it initially, then they're probably gonna keep like Calvet, for instance. They don't like going above 50%. So if you're at 50%, I've gotten loans done above that, but it's been on a case by case basis. But they hate going higher than that because they're like, hey, we don't want to jeopardize the veteran and losing their home. And I can just tell you, after talking to thousands of veterans, we'll eat top ramen, man. We'll eat our MREs just to get in that house, right? We'll make it happen, right? Because that's just how the veteran mindset. If we see that much opportunity, we exploit it, right? That's just what we do, right? That's what that's what we were trained to do. And it just, that ethos stays in us until we die, right? So we see that big of a spot and we exploit it, right? And so so I would just say that if you feel that your income is holding you back because of some, like percentage, don't let that stop you from calling someone like myself so we can go through that process and really see and unfold really what's there for you, and at that point, you'll know at that point, hey, what I can really afford.
Yeah.
So talking about that, what you just brought up, how does VA disability count into income when it comes to purchasing a home for a veteran?
Yeah, if you're rated with the VA, wow, it's just a wonderful opportunity for the veteran. First, the VA has their own fee for administrative purposes. It's called the funding fee. And if you have a rating of it at least 10%, then they waive that fee for you. And so it's a substantial fee. So it could go as high as 3.6% when you're refinancing a house. I mean, you're talking about on a $1 million property, it's a substantial amount of money, right? That's going to that. So, so if there is a rating, that even just, makes the pot even better for you. I mean, I would even tell you that I don't think out of all the products out there in the industry, conventional, government, it doesn't matter. If you're a veteran that has a rating with the VA loan is probably the best loan that you can ever get in the marketplace. I mean, just because the whole deal is just magic for the veteran. It's something where, and I tell this to veterans all the time, you're so blessed to have, because of your service, that you have the opportunity to take advantage of something that 99 or 98% of the population can't take advantage of. And you need to use it, and you need to use it.
But what I'm asking is, how do you calculate the disability income that a veteran receives? Because it's not really income, right? For tax purposes, it's not considered income. It's called disability and pension, right? How does it count when calculating the income of a veteran? It's
added to your gross income. It's considered income to the lenders. So the way that we look at it is, hey, if you're making 1,000 of non-taxable income, that's what's used. Now, there is a formula that they use is called grossing up the income. And what they do is they'll add 25% to that for qualifying. The problem with that is that the way the VA works is that they also use what is called the residual debt to income ratio. And under the residual model, the gross up doesn't count. They won't allow the gross up. They just take face value of whatever that benefit is. And so I don't personally, as a former underwriter, I was an underwriter for 10 years, risk manager. So I always go conservative. I don't try to try to make it look like I'm going to gross up, or I do the conservative numbers, and then I look at the risks that are behind it and how I can look at it in the perspective of the underwriter if I need that money to qualify. And then that's when I start working with the consumer and saying, hey, look, you know what? This is what we need to do to build the case that we can use the gross up.
Gotcha. Yeah. So it's like you said before, it's case by case, depending on
case by case
what you got to do to make sure that the veteran gets what they.
Man, Ken, where were you, man? When I first got my house, man. Oh my God, it was a shit show.
Yeah,
and I wish Jose was here because I would be chewing his butt out too, because I told him about Ken, and
Yeah. 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 Yeah.
Here's Ken's link again. If you need to reach out to him, make sure you reach him on LinkedIn.
Yeah.
Be a little patient, I'll tell you, because Ken does get really busy. And, when you're working with him, don't be deterred if he sends you a text at midnight, because he's working late on trying to get your deal cut before the morning. I mean, you actually text me at like 11 something saying, "Hey, I need to lock in your rate. Are you good to go or what? Or like, is this what you want?
Yep.
I got these deals. Which one do you want to? You got to pick before midnight. That way we lock in your rate and we can move on and process the whole stuff."
Yeah.
You definitely work hard for veterans.
So I have one more question. Well, I have not my last, two more questions. So can you explain to us a little bit about the Earl?
Okay. The Earl is for refinancing, and it's just an acronym for interest rate reduction refinance loan. And it's just a phenomenal product for veterans that currently have a VA loan. So it only applies to those that already have a VA loan. And what the VA is just basically providing to the veteran communities, they're just saying, listen, if your loan right now is at a certain rate, and you see that the marketplace, you're looking, at the ads on the TV and newspaper, wherever, you're saying, wow, it looks like rates are like 1% less or 0.5% less. I want to take advantage of that. Well, the VA makes the Earl available to you. Basically, it's a loan that says, hey, you have to at least save 50 basis points on your existing loan, right? And you have to have that loan for at least 210 days and have made 6 payments, consecutive payments. And if you've done that, then at that point, the you qualify for the VA as long as you meet those thresholds. And so, for instance, if you let's say you did a loan at 2 3/4, and you see the market, you hear on the radio, oh, rates are at all-time lows, whatever. And then you're like, I'm going to see if I can refinance. And then you can refinance at 2 1/4, then you do it. And the Earl cost, there's no appraisal, there's no income qualifying, there's no assets, there's no termite, there's nothing, there's no appraisal. It's just a straight, let's just get it from here to there. And it's a very simple process. It takes a couple of weeks to close, and you'll be in your new loan.
But your credit does play a big part of this, right?
Right. So when we do run credit, but we only run the mortgage credit. We don't run the consumer debt. And the credit scores do play into it. So now, if you're a veteran that has issues with credit scores, I do work with credit companies that help with that are legitimate companies, and then I also do credit rescores with the credit companies that I use, and that's like a quick way to. It actually gives you a report that you can take and say, hey, look, if I do this action on my credit. My credit will move 25 points or 30 points, whatever the points are needed. We can give you a report, and the report would, tell you the roadmap how to get to there.
Gotcha.
Got it. Wow.
Yeah, wow. We're gonna have to bring one of them on the show to talk about this another time.
Okay.
Talk about credit. Credit's a big deal.
Big deal.
It is.
Yeah, make sure you get the lowest interest rates and best deals with buying cars, buying everything.
Yeah.
Nowadays, everything. Counts.
Yeah. Awesome.
Veterans got the last question.
I got a last question for you, man. So, which is, what is your favorite MRE?
Well, when you told me, my favorite was the spaghetti and meat sauce. With the crackers and the cheese. I traded everybody for that. I'm like, hey, what do you got? Here you go. That was it. That's all I ate. I was a spaghetti fool. I was just eating spaghetti the whole time I was on the field.
Lord know what carbs.
Hey, just so everybody knows, the spaghetti, when it comes out of that package and you're scooping it out, you're scooping it like kind of like paste sauce, like a big box of pasta, like not spaghetti strings. They're just like
it's all clumped
Like
together.
Oh yeah,
Clump
well,
Like a pastel.
if you spend any time in the field, you know that you throw those MREs in your chest or your back, and you just as you're humping, you warm them up, you know, and then that spaghetti sauce starts warming up,
Yeah.
and then you start eating. that's the way to do it.
That is true, man.
Oh God, man. That's the shit I don't miss.
You and me both. You and me
Fucking
both,
shit
man.
food.
You and me both. I don't miss that at all.
That's funny.
The crap food, man, and being
Yeah,
clogged
man.
up for a week.
Yep.
Yeah.
Oh man.
Cool, man. Ken, I appreciate your time. Thanks for the knowledge, man. I'm sure there's a lot more to run key scenarios, because I get a lot of veterans asking me like, hey man, I want to start buying like triplex. And you did mention, it's a difficult process because you got a lot of investors that might want to buy them cash, you know, so you just gotta be patient. But I definitely appreciate it. And any veteran out there that's watching this, if you guys want to get connected, somehow you missed out, either go ahead and then also reach out to someone of the team members from 10 Hut, and we can get you connected with Ken. So use your benefits, take advantage. Just if you feel like, hey, my credit is bad, just give him a call. He can definitely guide you, give you a blueprint. So let's make, let's build this
well, guys, I appreciate you guys, both of you guys, we've known each other for some time now. And just great that you guys are doing well. And this is such a valuable resource. I mean, I just, this hut is a valuable resource, to look and to see what's out there and to network with other veterans. I mean, it's so important. And I just haven't met a veteran that doesn't want to hang out with other veterans. I mean, it's just in our blood. It's a brotherhood that just can't get separated on who we are. So I encourage you guys to continue with watching these shows. I'll continue watching as well, and hopefully we can catch up sometime soon again.
Absolutely. Definitely. Thank you so much. All right, guys. 10 Hut, thank you so much. Any questions, please go ahead and send us a DM. And remember, every Thursday, I'm running out. Every Thursday, 7 p.m. We're going to be off next Thursday. There's some things that we're doing, so we want to actually grow our channel. So there's some research that we're going to be doing to make this happen. But anyways, thank you so much for those that have been subscribing to the channel, liking our stuff, and sharing it. So thank you.
Make sure you subscribe.
Subscribe to the channel, 10hutshow.org. Just takes you directly straight to the YouTube channel. All right, guys. Until next time, take care and be safe and have a great weekend. Peace.
Cheers.
Salud.